Hi, and welcome to this week's edition of Macro Minutes, the 23rd of April. We'll start off with a disclosure statement. Information summarised in this webcast does not constitute financial advice or other professional advice. It is general in nature and doesn't take into account your specific circumstances and shouldn't be acted upon without full understanding of your current financial situation and future goals and objectives. All right. Now, this week's stocks in our universe, we've got Mineral Resources, Rio Tinto and Challenger. So we're going to start off today with Mineral Resources. So this was a previous recommendation from Macro Investing Department. It hit price target of $43.95 on the 15th of April. Having initially been released as a recommendation on the 11th of February, so that was quite a good quick one. The entry price there was around about $36.80. This represented a rise of 23.3, including the franked dividends, or without the dividends, 19.4. So, although 11% of revenue comes out of lithium, it's got a 96% correlation to the global lithium price index. As such, a rise in global lithium price forecast caused Macro to increase the price target on Mineral Resources from 41 to 43.95. Which was obviously a very good call in the end. The rise in lithium price forecast was a result of expected demand increasing as new infrastructure spending, which would benefit the technology relying on lithium-ion batteries. On the supply side, it was a forecast that there would be supply deficit until the mid-2020s due to past underinvestment into lithium production. Next up, we've got Rio. Rio is a current investing division recommendation. So on the 20th of April, it released its first quarter production results and the 2021 unit cost guidance for the Pilbara iron ore mine and iron ore and copper mine. They both remained unchanged. While Pilbara saw a production decrease of 2% on the previous period, Q1 shipments were 7% higher due to insufficient inventory levels. While copper production was down against the last period across all mines, strong smelter performance saw overall refined copper production increase. Overall copper production guidance remains firm. Copper price currently is going from strength to strength. Doesn't really look like it's going to pull back anytime soon. That's sort of in line with a lot of other commodities at the moment. So, but back to Rio, bauxite, aluminium and alumina Q1 production figures were all higher quarter on quarter, although bauxite was down 2% in the previous period just due to adverse weather conditions really, so nothing of any major concern there. Next up we've got Challenger. It's a current recommendation for the investing division. It also was a recommendation for the trading division, which obviously has a shorter time frames and tighter stops. So on the 20th of April, CGF released its third quarter update announcing assets under management grew by 8%, exceeding 100 billion for the first time, although it downgraded its net profit before tax, just very slightly, but now forecasting that it will be towards the lower end of the initial guidance of 390 to 440 million dollars. This is largely due to annuity pricing not reflecting the decline in credit spreads instead of AUM sales. CGF was down 15% on the day of the announcement. The trading report was stopped out of that one, but as always, very important to keep strict risk management on those sorts of things. So live to fight for another day. But as far as the analysts here are aware, this will be a little bit of a one-off, and they're happy to hold it from an investing point of view. Rightio, now stocks to watch out for over the next week. So we've got US earnings season for the next couple of weeks particularly. So we're just going to focus on Google, Apple and Facebook, the three of the big ones in the FANG index. So Alphabet, or Google, is expected to report Q1 2021 earnings on the 27th of April, so next week. Analysts are forecasting earnings growth of about 25% year on year in quarter 2021. That represents an acceleration in company earnings from the fourth quarter of 2020. This 25% year on year growth is slightly less impressive than it first looks, considering that Q1 2020 so the start of the lockdowns, which caused ad revenues to decline and marketers grew more cautious in the short term. Although Google's PE ratio implies a premium of 1.2 on the industry average, the price to earnings growth ratio, which is commonly used in the internet services sector of the company, is 1.87, which is in line with the industry average. On the 19th of April, JP Morgan upgraded its price target for Google by 7.7% to $2,575, which is about a 13% premium on the current price. Price target increase is based on fundamentals, with JP Morgan highlighting Google's position in the ad and cloud space. Next up, we've got Apple. So it's expected to report on the 28th. It came close to doubling its market cap in 2020 and became the first $2 trillion company in the process. The company traded at a forward PE of 22 times at the end of 2019 and rose to 33 by the end of 2020. It currently sits at 36. During 2020, Apple stock rose about 85%. They hosted an event yesterday announcing a range of new and upgraded products, such as revamped credit cards, iMacs, and new Apple TV. Investors shrugged off the new products. From what I remember, most of these have been in the pipeline for a very long time. If anything, they're probably late to the market, and that reflected in the share price trending down in the day. That's pretty much following recent trends of Apple investors caring more about the company's earnings now than they do about the products, as opposed to, say, a few, 5 years ago, where every time they launched something, the stock price would go ballistic, which is a bit of the Steve Jobs effect, which is no longer there, obviously. Rightio, next up, we got Facebook. It's on the 28th as well, so that'll be a very big night. It's had a recent streak of beating earnings expectations, with a beat of 39.7% in Q3 of 2020 and 19.8% in Q4 of 2020. So now the analysts are increasingly bullish on Facebook being able to surprise once again. So there could be a very much a case of buy the rumour, sell the fact there. So it may rally into the number and then potentially, even if it's in line, fall away afterwards, which has happened with things like Netflix this week. Look, it remained the app with the most monthly users. Facebook app rose one spot to become the second most downloaded app in Q1. Facebook Messenger, meanwhile, was third and ninth in the world, respectively. It's a fairly busy week. Next week, I think we've got Snapchat this week as well. I think that might be tonight. But there's a raft of companies reporting over the next 2 weeks, so it'll be extraordinarily busy from the US front. So you definitely you'd probably be expecting some movement, particularly in the NASDAQ. So I think there was a trading report recommendation put out yesterday for those looking for a hedge, was the SNAS product, which is a short NASDAQ ETF for any of those out there that are nervous. This should be used as a hedge against your portfolio rather than an actual outright trade. It's not really recommended for anyone in cash or underweight in equities at the moment, but certainly something that is an option for those who would like to hedge a portfolio. So looking ahead next week, we have FOMC minutes. We've got Australian CPI and we've got US to deliver their advanced GDP. So next Wednesday at 11:30, we've got the quarterly CPI data in Australia. Unlike the US, we release our CPI data quarterly, not monthly. So there is a tendency for there to be quite large movements, particularly in bonds, bond futures, etc. It's one of the most anticipated numbers of the month, of the quarter, and usually there is some volatility directly after it, so we'll have to watch out for bond yields there. Next Thursday at 4 a.m, we've got the Federal Reserve releasing its Fed fund rates, and they'll hold their press conference 30 minutes after that. As we've discussed in the past, there'll be more of the same there. They do tend to be a touch more honest and less jawboning in terms of the press conference. So there might be something coming out of the press conference in the Q&A. It's one of those the market will be looking for basically their guidance on on any sort of tapering of QE, I would expect, or it's just see if they move up the timeline on rate movements and comments on inflation generally, I'd say. Now, 10:30 p.m. as well on Thursday, US will deliver their advanced GDP. So the US they release GDP every month. However, it's released so this month, for instance, the month after the quarter end. There is the advanced GDP. The next two numbers are just revisions after that. So this GDP number is generally the most volatile of the three. So basically, we'll expect a little bit of movement out of that. Recently, the IMF's upgraded the growth outlook for the US. Their reopening's going very well. The vaccine rollout's well ahead of schedule. 80% of people over the age of 40 now, I think. It's either 40 or 50. Have been vaccinated already. They're above 200 million. So look, there could be a surprise upside number there. And obviously, given the slightly smaller sample size of the data, without the revisions being an advanced GDP, there is a tendency for this number to be a little bit more volatile and out of the analysts' expectations. So that could actually have some effect next Thursday as well. So look out for that. I suppose in conjunction with a big earnings season in the US, it could be quite a volatile week next week, really. So make sure that everyone's on the ball and making sure you're checking in on all your stocks and checking with your advisors and reading your emails. Thanks for attending the Macro Minutes. We will chat again next week.